What up, everybody? It's your boy CG back at you guys again with some more cryptocurrency news and information. Now, before I get into today's news articles, I'd like all of you to do me a favor and kindly hit that like button. It'll bring a lot more attention to the channel and possibly new people who may be interested in this type of information. So just do me that favor. It's free. It doesn't hurt you. You know what I'm saying? But yeah, before I get into today's articles, like I just wanted to go through some of the price action because that's one thing about the cryptocurrency market. It never turns off. There's no stopping it. There's no off button. The market just keeps going and going no matter what part of the world you're in, no matter what time zone, it's always on. That's one thing I do love about it. It's like a universal stock market. You know what I mean? Like that's pretty dope if you ask me. But yeah, everything seems to be in the green. But we all know if Bitcoin takes a nosedive. Oh man, if you've been here for a while, you kind of get the joke. It's just hilarious. Everybody loses their mind as soon as BTC takes a nosedive. There's only one coin I would say that really has been resilient throughout all of the BTC price action. Okay, price action. Okay, maybe two coins. That would be BNB, Binance Coin, and Chainlink. Chainlink has proven extremely resilient in times of downtrends, and Binance Coin as well. But Binance Coin is probably one of the biggest cryptocurrency companies on the market next to a select few. You know what I mean? But yeah, in other news in the financial markets as well, I just feel like we should, look at these types of things as well because these actually do play a big role in where we're going with finance version 2. And, finance version 1 is always going to have that how can I put this? It's always going to be I don't want to call it the backbone, but as it's the current thing that's moving a lot of price action in the world. You know what I mean? When something happens over here, it can reflect in finance version 2, which is cryptocurrencies. But yeah, oil is down still, $27. A lot of people were speculating that oil might go down to $10 a barrel, and people were saying that shoot, short oil, long Bitcoin, and so on and so forth. It's just there's a lot of different perspectives on how the traditional financial market ties into the fundamentals of cryptocurrency and the potential for the price to go up. But hey, that's only for um, us to know a couple years from now. That's something that we're not going to know anytime soon. Uh, but hey, who am I to say? We may know as soon as next week. But to be honest, just be prepared for a long wait. Gold is down as well, 1640. Gold took a big bull run. I think gold was what 1200 last year. Gold was around 1200. Maybe that was 2018. I can't remember exactly. But yeah, so getting into today's first article, tapping into tokenization for fresh ideas, changing finance, gaming, and more. So apparently we're getting into the tokenization of everything, which is what a lot of people were talking about, that cryptocurrency could actually change finance version 1 simply because instead of saying version 1, should I say like finance alpha? Finance alpha, and we just call cryptocurrencies finance beta or finance gamma. I like that though, finance alpha and finance gamma, or finance beta. But wait, beta, the alpha comes before beta. So yeah, finance beta, I guess, because in a way, I still don't think the cryptocurrency market is going to be the end all be all. So we could call it finance beta. So yeah, let's go with that. From now on, traditional financial markets are finance alpha and cryptocurrencies finance beta. But moving on, with ongoing talks of CBDCs, central bank digital currencies, and now even a possible digital dollar, tokenization continues to be a hot topic both in the crypto world and in traditional finance. It's been a buzzword in the industry for a while now, and the concept is being heavily explored by startups, established institutions, and governments alike, although centralized and decentralized through centralized and decentralized blockchain technology. As the world of tokenization marches on, some questions have been raised from the technological, financial, and regulatory standpoints. Here is a deep look into tokenization, how it will impact the financial markets, and what challenges it currently faces in its own on its way to mainstream adoption. What is tokenization? So this is kind of like a crash course for a lot of people who were never really familiar with these terms. And we've actually talked about this before on my channel, and this is a long time ago, about everything being tokenized in the future, from real estate assets to stocks to, like, it's crazy, you know what I mean? Like, when you really understand what the cryptocurrency market can really do as far as how it will affect and revolutionize finance alpha, just the concepts that it introduces, it could really change a lot of things, and it already is changing a lot of things. So it's only a matter of time. But tokenization is a process through which assets are made digitally available on a DLT, a distributed ledger. Well, distributed ledger, DLT is distributed ledger technology for those who don't know, but on a distributed ledger. The concept has been made possible by the creation of blockchain technology, which in turn ensures that transaction and balance records cannot be tampered with or retroactively altered. This process can take many different forms depending on what is being tokenized, the technology used, and the purpose of the token. Centralized or decentralized blockchain technology can be utilized depending on the aforementioned variables. Tokenization of a decentralized ledger allows ownership to be verified in a quick and trustless manner, but also poses a challenge when it comes to performance and compatibility. Digital tokens are mainly a way of representing ownership of the asset they are backed by, and can be very useful when it comes to transferring or exchanging it fully or partially, improving liquidity and allowing for increased access to these assets. From company or real estate ownership to art and video game items, tokenization reaches beyond financial applications and has the potential to transform and improve countless industries. Although tokenization is a fairly new concept, it's already gaining ground in the fintech world, financial technology. Tokenization is here. Cryptocurrency advocates often exaggerate the current capabilities of cryptocurrencies and blockchain technology. While blockchain has enormous potential, crypto assets are still in their infancy and are nothing more than a blip in a vast universe of established financial markets. Moreover, whilst the prospect of replacing the fiat currency system with Bitcoin is one that excites many enthusiasts, Bitcoin, which is what I've been thinking, and I'm sure many people who are familiar with the market also have been thinking or just voiced already, Bitcoin would simply not be able to handle adoption on such a large scale due to technological constraints when it comes to processing transactions. While crypto as a currency or global payment system is still very much a dream, tokenization has crossed that bridge. It has gone from theory to reality in just a few years. Not only can it be applied privately on a small scale, but it also does not require a high throughput capacity. As assets can exist on separate blockchains, centralized or otherwise, unlike the concept of a national global cryptocurrency based monetary system. Although prior iterations of tokenization already existed in projects like Counterparty and NXT, the Ethereum blockchain brought the concept to light. Nowadays, many platforms like EOS, Tron, Neo, Waves also allow assets to be tokenized. Centralized blockchain technology is also used, especially by large-scale private and public institutions. Non-fungible tokens. So, one of the most popular applications of tokenization is what is known as non-fungible tokens, or NFTs. In an NFT system, each token or set of tokens are different from one another and therefore hold a different value. Non-fungible tokens have gained a lot of visibility in the crypto industry with the emergence of collectible games like CryptoKitties. Virtual Land is also becoming big in the industry. There was another one, Decentraland, and their token was Mana, and I believe Decentraland probably had like a similar type setup. I don't know. I never actually played the Decentraland game, so yeah. NFTs are also used as a way of retaining ownership of in-game items. This allows the item to be exchanged outside of the game and even through smart contracts, which ensures that once the item is passed in-game, funds are released and fraud, which is rampant in secondary gaming markets, is eliminated. Another interesting application comes in ensuring in-game ownership is assured even if game servers malfunction or get hacked. While NFTs are popular in the crypto and gaming community, the concept is now extending to traditional finance and has become a way to bring liquidity to non-liquid asset classes like real estate. It allows people to easily raise funds for property investments using the tokenized asset as collateral for a loan. Hmm. Yup, like I said, it's gonna be a heck of a next 10 years, man. It's gonna be a heck of a decade. Another application of tokenization is stablecoins. Different iterations of tokenized fiat currencies exist, including Tether, which was first used on the Bitcoin blockchain through the OmniLayer protocol. Since then, other examples like USDC, Stable USDS, and WUSD, and even ones backed by gold like Pax Gold have been issued by different entities. Stablecoins aim to leverage the benefits of blockchain technology without exposing users to the volatility often associated with cryptocurrencies. They are usually backed by an equivalent amount of currency or commodity of the currency or commodity that they represent and can be redeemed at a 1-to-1 ratio. There are also stablecoin projects like Saga's SGA coin and Cello, don't know, that aim to bring further stability by issuing custom tokens that are backed by a basket of different fiat currencies. That's interesting. Reducing exposure to just one economy. Erez Romas, the communication manager of Saga, told Cointelegraph, the SGA model starts by being fully reliant on the value of a trusted basket of currencies, replicating the configuration of the IMF's SDR drawing rights. But unlike all other stablecoins, SGA aims to eventually separate from the SDR and become an independent currency with its own value. Interesting. Next up, the other big topic that a lot of people were talking about 2018 to 2019, security tokens. In 2018, crypto took the spotlight and became synonymous with volatility and speculation, in part due to initial coin offerings. Similar to initial public offerings, the traditional finance counterpart, ICOs are a fundraising mechanism. ICOs have opened the doors of equity investment to a wider audience and paved the way for projects like Ethereum and EOS. However, the returns of early projects have led to a flood of low-quality projects and scams. Regulators in the United States have stepped in, and ICOs have since lost their popularity, making way for security token offerings. Security tokens are basically tokenized company shares. Example of popular STOs include Nexo or Robinhood. Hold on, did I read that wrong? Example of popular STOs include Nexo. Okay, maybe it was a typo on their head, on their end. Include Nexo and Robinhood. Let's just read it like that. And Tony Trenchev, a managing partner and co-founder at Nexo, told Cointelegraph, opting for a blockchain-based STO has some advantages, as listing on a traditional exchange would be harder and more expensive. But it also allows a wider range of people to participate and acquire the tokens after the STO, including those without access to traditional financial services. It also allows for instant settlement, which in a time of crisis like this can prove to be essential for those seeking liquidity. DeFi, decentralized finance, decentralized apps, and crypto synthetic assets. Tokenization has led to the emergence of smart contracts and has brought many advantages to the field. By allowing contracts to be agreed upon and executed automatically, smart contracts remove the need for third-party intermediaries and make new concepts like decentralized finance and decentralized applications possible. So essentially, in layman's terms, they're saying that with the dawn of basically automated contracts, you wouldn't need like intermediaries to handle your money. Like for instance, if you want to send, how can I put this, money, like a wire transfer from one bank to another bank or to another person, you know what I mean? You would have the money would have to go through a whole bunch of transmitters, if you want to put it like that. Like, you just refer to them as transmitters or middlemen to actually process that amount and then have it sent to your friend. But on your friend's end, they're going to have a middleman that has to process the money on their end. And then it's just like there's a whole bunch of in between. Instead of it being as simple as me handing $1 to my friend, it's like me handing $1 to the next guy, and the next guy has to look at the dollar, take his fee for for looking at the dollar and making sure everything was legit, and heading to the next guy, and the next guy does the exact same thing, looks at the dollar to make sure everything's legit, takes some money out of your dollar, then finally gives it to your friend, and by then your friend is getting what, 80 cents out of that dollar. However you want to phrase it, cryptocurrencies and blockchain technology have changed that the essence of how money transfers could be in the future. As far as there would still possibly be the transaction fees, small scale, but it would be nothing like how it is today, as far as eliminating middlemen from the process of you trying to transact money with like a business partner or a friend or whatever it may be. But cryptocurrency-based synthetic assets, which expose users to a variety of different assets like commodities and stocks without leaving the cryptosphere, are also a concept that has been gaining popularity. A recent report that by DApp Radar shows that Synthetics, an exchange that allows users to trade in these assets, was the second most popular DeFi application during March 2020. John Jordan, the communications director of DApp Radar, told Cointelegraph, Synthetics is still small, but the user base has been growing steadily and is pretty active during periods of high crypto price volatility, which is what you'd expect in a trading product. Also, tokenization hits traditional finance, tokenized securities, and CBDCs. And this is funny because this is actually another topic, another article that I have is actually goes a little bit more into depth about these CBDCs, the central bank digital currencies. It's really interesting because now you're seeing a lot of this while this coronavirus panic is going on. So, man, I really wouldn't be shocked if they really use this as how can I put this, a jump off point, the coronavirus as the jump off point for them introducing completely digital payment systems and eliminating the use of fiat to a certain degree. Not to say it would be completely gone, but more than likely, a lot of fiat transactions that take place with, I guess, maybe even, let's even say, like Australia's new system where anything over $10,000 you can't use paper. Well, Australia's dollar, like I've talked to Australians, their dollar is like plastic and stuff like that. It's pretty cool. They were telling me about it. And I was like, why can't the US have like plastic money? But yeah, they basically saying that you can't have over $10,000 in transactions done through fiat. You have to do everything digitally. So maybe something like that will get introduced into the market, or they may just go full Rambo and just say no more money. No, everything is digital. But hey, you never know. Tokenization has gained some ground when it comes to institutional use. Recent projects, such as the first Swiss franc backed stablecoin to be issued by a regulated Swiss bank, or the first covered bonds issued as a tokenized security on a public blockchain by Society Generale or Generale, have demonstrated how popular the concept is becoming. While Society Generale, I've heard of this company before. Efforts have shown that securities can be tokenized on a decentralized blockchain and still be fully compliant. Private blockchain tech is still a trend when it comes to security tokenization. Nevertheless, examples are becoming vast and they include efforts like the World Bank and Commonwealth Bank of Australia. That's funny that we were just talking about Australia, but which have issued a blockchain-based security token called Bond I. The Central Bank of China has also recently tokenized 20 billion Chinese yuan, $2.8 billion worth of bonds using blockchain technology. Central bank digital currencies have been making headlines, from the digital dollar advocated by former CFTC chairman Christopher Giancarlo. Giancarlo was actually a really big cryptocurrency guy. He was into the perspective of introducing a more, how can I put this, um cryptocurrency friendly regulatory framework for the United States. But only time will tell. I think the United States is eventually going to come around, because I'm not gonna say that they're dumb. A lot of people think the United States is just a whole bunch of talking heads and they're dumb and stuff and things of that nature. They're all old people, which I do agree. They're all old people that are running the U.S. right now, and it's kind of funny that we're relying on people who are in their years of senility or when they're going senile then rather than putting faith in the younger generation and letting them lead. But hey, whatever. That's not what we're here to talk about. But yeah, so I think the United States actually does plan on jumping into the cryptocurrency market. I mean, look at all the different institutions we have around in the United States that are actually cryptocurrency working on cryptocurrency platforms right now. So it's not like the United States is totally against it. I just feel like they're waiting for their time to make their move. China, for example, has been working with the concept since '05 in hopes of launching its own digital yuan. The good, the bad, and the law. But you guys can read the rest of this article. I'm not going to get too deep into this. So yeah, tapping tokenization. Well, I spent a long time on that article. After trashing Bitcoin, McAfee is promoting these three altcoins. So you guys know John McAfee or McAfee. I don't know how you say his name. I would say Mecha. Well, the A is capital, so I guess it's McAfee. But he's been a big and prominent figure inside the cryptocurrency space for the last couple of years. And he was actually a really big Bitcoin advocate in the beginning. He even made a bold claim that Bitcoin would hit $1 million by the end of 2020. So, on the and he said that he would eat his own member if it did, but I don't see it happening in any way. So people can be a little overzealous in their predictions and bullish sentiment, but hey, that's life. You're not always going to be right. You're not always going to be wrong, but I guarantee you, general ideas about the direction that technology, when it comes to technology and it being actually useful, you can kind of understand. But John McAfee, when I predicted Bitcoin at 500,000 by the end of 2020, it used a model that predicted $5,000 at the end of 2017. BTC has accelerated much faster than my model assumptions. I now predict Bitcoin at 1 million by the end of 2020. I will still eat my dick if I'm wrong. While many thought he was kidding, he continued to double down on his stance. Okay, they're basically just talking about what he said before. Nobody cares about that. In a message published April 4th, McAfee made himself clear yet again, sharing that he thinks Bitcoin is worthless. But despite his long-standing statements that the scarcity of the cryptocurrency see it greatly appreciating value, that's hilarious. To see somebody go from big $1 million BTC by XYZ, now Bitcoin is worthless. This old dude is going crazy. Despite his long-standing statements that the cryptocurrency could greatly appreciate in value. As to what will replace the flagship currency, the enigmatic technology entrepreneur pointed to the DAI stablecoin, Ethereum, and Monero, explaining that the latter is widely used among tens of thousands of us who no longer use banks, credit cards, or paper currency. This comes after McAfee said Bitcoin is an ancient technology, lacking the first blockchain to the Model T of automobiles. Yeah, that's John McAfee's opinion on where he stands right now as of 2020 and where he sees Bitcoin or where he places Bitcoin. So yeah, I guess he's moved on since it seems like he might have to eat his dick. Oh man. So yeah, next chapter. What's the next chapter? Next article. U.S. dollar is dying. Buy Bitcoin, says Rich Dad Poor Dad author. Bitcoin past few weeks have been I said the Bitcoin past few weeks. The past few weeks have been undoubtedly rough for crypto. From the February highs, Bitcoin has fallen 36%, reaching a low of 3,800 in March. Robert Kiyosaki, the author of the popular financial book, as and many of you may be familiar with if you're any type of entrepreneur or maybe had an interest in it. The book Rich Dad Poor Dad sees no reason to fear, though. In fact, the well-known investor recently went as far as to say that it's time to drop dollars for Bitcoin and other hard money. In a recent tweet, Kiyosaki explained that with the Fed counterfeiting trillions of fake dollars, 82 billion a month to 125 billion a day. That's so insane, man. And interest rates at 0%, it makes sense to save gold. God's money or Bitcoin, people's money, rather than the fiat dollars that don't yield anything are being constantly debased, like I said in my other videos. He added in a later tweet that the dollar is likely dying, boosting the case to invest in gold, silver, and Bitcoin. So yeah, you can see that he was tweeting. Well, you can see his tweet here that they're referring to, or for bleh, English, man. I'm thirsty too. That they're referring to. Demand is booming. It should come as no surprise then that the demand for Bitcoin is booming. And to be honest, it's very true because a lot of people are starting to integrate Bitcoin, and I'm not even going to say cryptocurrencies. They're integrating Bitcoin into their platforms. In some way, shape, or form, they're making Bitcoin the thing. So I wouldn't be surprised to see a big boom in Bitcoin coming. I'm not gonna say like I said, I'm not gonna say mid short term, or I'm not even gonna promise midterm, but long term, the price outlook definitely Bitcoin can definitely make people some decent money. Leading cryptocurrency exchange Coinbase reported that during the now infamous Black Thursday crash, the exchange saw a dramatic surge in buying interest for crypto. Just beyond just a rush, two things are clear. Customers of our retail brokerage were buyers during the drop, and BTC was the clear favorite. Our customers typically buy 60% more than they sell, but during the crash, this jumped to 67%, taking advantage of market troughs and representing strong demand for crypto assets even during extreme volatility. The US-based Kraken corroborated this narrative, writing in a recent tweet that the exchange recorded an 83% rise in signups and a 300% increase in verifications over the past few weeks. Wow. Also, per previous reports from NewsBTC, according to data from blockchain analytics company Coinmetrics, the value of all US dollar stablecoins is on the verge of passing $8 billion, a metric up by 20% in the past month in itself. So that's crazy. If you guys are following all these indicators, like this just is a sign of the times to come. And maybe one of these stable coins really might be the digital dollar in its infancy form, or maybe it is the digital dollar and we just don't know it until they announce it. Next article, though, next and last article actually. BIS calls for central bank digital currencies amid coronavirus pandemic. So, like I was saying, in a previous video, and actually the last few previous videos, just continuing on, I see this really as a jump off point for them to really start kicking up their plans, kicking them into gear to really start making everything go digital, because using the coronavirus as a catalyst for, how can I put this? If you guys are familiar with the phrase Hegelian dialect, you basically introduce a problem so that you can introduce the solution, which is what you actually want in the first place, but that people would not accept under normal circumstances. So you create this problem and you give them a solution, and because under normal circumstances they wouldn't take it, but under circumstances where they have no choice, they take it. That's kind of how Hegelian dialect works. So that's how I would see this. The corona. I'm not saying that the corona thing or the coronavirus isn't a real issue or anything, but I'm not gonna sit here and act like this can't be another method that they use to, how can I put this, get their way or put things into action, because this is how big government's been working for years now. Let's be honest with you. Whether you talk about 9/11, where you talk about all these other big world events that have taken place, but we're not here to talk about that. But yeah, the Bank of International Settlements has issued a report arguing in favor of central bank digital currencies and digital payments amid the COVID-19 pandemic. The bulletin published by the BIS, a 600-member international financial institution representing the central banks of 60 countries, urges central banks to consider developing central bank digital currencies in light of concerns regarding the spread of coronavirus through existing payment methods. Whew. Like a man. BIS warns of COVID-19 transmission via credit card terminals. Let's Man, like, didn't we just read an article where they were closing out Bitcoin ATMs too, because they didn't want people crowding around the ATMs? So it's kind of crazy. Not kind of crazy, because to be honest with you, stuff like this is actually not even. This is kind of like how could I put this? This is like just another bump in the road compared to the long track history that we have of just being kind of, how can I put this, the testing ground or ground zero, I would say, for a lot of these new, I would say, ideas that they come up with and they want passed. But hey, demand for cash falls in the UK. The report notes that in past crises, demand for cash has often increased as consumers have sought a stable store of value and medium exchange. While the BIS identifies a recent increase in the circulation of cash in the U.S., the report notes that the current data does not yet paint a uniform picture, with ATM withdrawals falling in the UK. In the medium term, the report predicts that the outbreak could lead to both higher precautionary holdings of cash by consumers and a structural increase in the use of mobile, card, and online payments. CBDCs could exclude unbanked and the elderly. BIS anticipates the current climate could lead to central bank operated payment infrastructures such as CBDCs quickly gaining prominence. However, the report emphasized the need for CBDCs to be designed to withstand a wide variety of shocks, including pandemics and cyber attacks. Despite advocating for CBDCs, the BIS warns that a move away from cash as generally accepted means of payment could open up a payments divide between those with access to digital payments and those without. So, like older people who can't really adapt to these new systems, or people who don't even have access to those to technology at all to a certain degree. And that's actually a really interesting statement that they made right there, which is why I'm really interested in projects. I was stating this before, but it's funny because they keep making these statements and these points, and it always comes back to these projects I'm looking at, Bab and Amon. And Amon, like I said, isn't really trying to bank the unbanked. That's more so Bab that's really touting that philosophy, but it's just the idea of them. But hey, like I said, it's all a matter of time. We just have to see where the future takes us. Oh, I guess that was the end of the article. Well, yeah, everybody, this be your boy CG. Hit that like button on your way out if you guys could. It's free once again. Like I said, I'm gonna catch all of you tomorrow. Peace. I'm out.